This is Leo again, and welcome to the module 2 of the Pivot Mastery course. Let's take a look at the understanding the pivot points in depth. But before we jump in, let's recap what we have learned in module 1. So we explored what the pivot points are and their importance in the price-based analysis. And also we looked at why the professional traders across the globe rely on them, right? So these pivot points, we know that it will act as a dynamic support and resistance levels. And now in module 2, we go deeper. We'll break down these three main types of pivots you will use every day. Okay. Now, the first pivot type that we're going to look at is the classic, or we call it sometimes as a standard pivots, which ranges from S1 to S5 and also from R1 to R5. Okay. But in our trading room or in our trading scenarios, we limit ourselves to the all the way up to S4 levels and all the way up to R4 levels. Okay. So the classic or standard pivots are calculated using the previous day's high, low, and close. So they include a central pivot line. Support levels are from S1 to S5 typically, but in our case, we're going to use all the way up to S4. And the resistance levels are from R1 to R5. These levels helps us to predict where price may pass, reverse, or accelerate. It makes it very essential for any traders who do intraday and as well for the swing trading. So this is the pivot point formula, and you have the formula for the resistance level at the left hand side, and you have the formula on the support levels on the right hand side. So if anybody wants to look into that, they can always take a look at that. And the next one is the CPR. We call it as central pivot range. Shortly, we call that as a CPR level, which is basically a 3-line system, which is composed of top central. We call it as TC, bottom central, which we call it as BC, and also central pivot. Okay. So central pivot is, it will create a zone rather than a simple line, right? Which gives us insight into the balance, volatility, and expansion potential, right? So technically, a narrow CPR indicates that the trending day is ahead, whereas the wide CPR indicates that the market could be in a sideways range on a particular day. And here is a formula. You can see it on the levels, pivot, BC, TC, and here's a formula. And the description is very simple. Central pivot is the core of the CPR, and the bottom level of the CPR zone is a BC, and the top level is the TC, right? And let's see what the CPR type is and its implications. So narrow CPR, what is the condition of a narrow CPR? It means that the TC is equivalent to the BC, right? Which is very, very thin line, okay? And what is the implication of the market? It likely, there is a chance for a breakout, or sometimes we call it as a trending day. Okay, could be either bearish or it could be bullish. Okay? And the second one is a wide CPR, where we say that the top central is not equal to the bottom central, okay? Which indicates that there is a gap between the top central pivot and the bottom central. So it's a little wider. Okay. So what is the meaning of this? How do we understand the market based out of this? It says that the sideways move is very, very possible on this particular day. Sometimes, there could be a mean reversion day also. And we're going to look at that in the examples. Right? Type is a Camarilla pivots. Normally it ranges from L1 to L6 and H1 to H6. But for our trading scenario, we use typically the L3 level and L4 to L3 level to L4 level and H3 level to H5 level. So Camarilla pivots are basically position-based intraday levels. They use a complex formula to generate the support levels from L3 to L5 and resistance level from H3 to H5. L3 and H3 are ideal for reverse trades, while L4 and H4 are perfect for breakout entries. Okay, L5 and H5 often act as extreme zones, which is very, very useful for the scalp reversals or for the stop loss ends. Okay, And here is the formula. You can see, and the description is for L3, it will act as a key support level, often used for reversal. And for L4, it is used as a breakout support. It tells you that the trend is going to continue. And for L5, it is going to be an extreme support level, which is the top level, right? Where the panic will be created. So there is a possibility that the market may pass at this level. And likewise, in the H3, it is going to act as a key resistance level where we use it for reversal or fade zones, right? And for H4, it is something like a breakout resistance zone, which means the trend is going to continue further. It is possible for a trigger at this level. And the H5 is nothing but an extreme resistance level, right? Which means that, market is kind of a blowout zone. So why this pivot level matters most, okay? So we talked about the standard pivots, we talked about the CPR, and we talked about the Camarilla, right? Keep in mind, not all these pivot levels are equal. Often S1 and R1 will act as a intraday reaction points. CPR helps you to understand the market structure, and H3 and L3 in Camarilla provide more powerful bounce levels. Okay, knowing which level to focus, it purely depends on the type of the day. It could be either a trending day or it could be a ranging day. Okay, and then we have a strategy towards it. The most important key is that we have to watch these levels and see how the price react at these zones or levels. Okay? Now, how do we combine this? How do we extract the strategy out of this, right? So when we combine the CPR, Camarilla, and standard pivots, the real power comes when you layer these pivots together. For example, if price is near the CPR and also near a H3 or S1 level, that confluence makes it a high probability trading zone. Okay. Use standard pivots for targets, CPR for structure, and Camarilla for precision entries. It is a combination that builds a trader's confidence. So what it means is that we're going to combine all these three together, right? And then we're going to spot the critical zones and then take a trade, which is typically in high probable trading zones, right? That's what we're going to look at. Okay. Now, when to use this pivot type, right? So we use CPR to understand the gauge of the market structure and probably identifying the trading potential. Like for example, if it is a narrow CPR, we would expect a kind of a trending ray, right? If it is a wide CPR, we know that we are going to do a scalping today only. We are not going to look for any big movement capture today, right? So likewise, this gives a structure of the market generally in context to the previous day. The classic pivots are used for setting targets and spotting early reversals. Okay? Similarly, Camarilla pivots are used for entering into a precision trade in a fast moving market because the market moves pretty fast when it nears a breakout zone, or could be a fake breakout also, that we will see in the upcoming slides. Okay, so what we have to do is that think of these, all this information like the Camarilla pivots, CPRs, and the classic pivots as a trading, toolkit for you. Okay, and we're going to deploy this and understand based on the market context and what is our trading style, right? You could be a scalper, you could be a trend following trader, or you could be a positional trader where you take a hedge and then sit comfortably. So we're going to look at those things in detail in the upcoming videos. You can see the chart. I'm using TradingView, and this is the indicator that I have created. It is not a rocket science. It is widely available everywhere in the TradingView. But I have used my own coloring system, so it is easy to identify and spot while we look at the chart in the fast moving market. So now let's go and take a look at these things. So you have this color, right? This color and this color. It forms the CPR, right? What you see on the white color at both sides, in this case is an L3, and in this case an H3, right? These are all Camarilla pivots. L4, again on this color, Camarilla pivot. L5, this is a Camarilla pivot. So likewise, this is on the lower side. Likewise, on the higher side, you would see H4, right, at this level. And you have R1, which is at this color. and this is a previous day high, and we also marked the previous day low here. You can see that here, right? And this is H5, this is R2, and if we scale up a little higher, we can see even more, because we are plotting from all the way up to S4 level, right? And R4 level. So you can see this of S3 level, S4 level, likewise R4 level and R3 level, right? So now in the earlier in the model earlier, we discussed about the CPR, right? So let me give you one example. So if you look at this particular day, the previous day was a narrow CPR compared to this day, right? And market opened above the CPR, but the bar could not sustain. And if you look at this level, right, this is exactly closing below the H3 level, right? This level, H3 level, right, which is here, right? So if you see this combination, which is nothing but the bottom central and the H3 level, this provides a very, very strong support or a resistance, right? But in this case, it is acting as a resistance, right? And market has tested this level and then it fell down, right? If you could see that, this is an H3 level, a combination of H3 and BC, okay? And you can see that this is L3 level, okay? If you see this, we talked about the breakout zones, right? Moment it break out this level, right? It kind of just went and hit the L4 level at this level. So this is very important, okay? So if anybody is taking a trade at this level, wait for this level to hit, okay? And wait for the reversal or continuation of the breakout. And this is how we take a trade. So this is on the Camarilla pivots, okay? And if we look at on the standard pivots, we can look at this way. For example, another additional information. So you have this S1, right? We talked about this reaction zone, right? This reaction zone is nothing but in this case, it's an S1. So S1 has got a good reaction to it, right? It broke out and it took the S2 level and again gave a breakout. You look at this candle, right? This is a good candle, right? This is a good candle. So this is the kind of things we should look at while we take a trade. And if you look at this, it was breaking the uh, S2 level, and then it was almost breaking the S3 level also. You see this reaction here, right? And then it is touching the S4 level. So this is the power of the pivot points. If you look at in context, okay, it's going to be very, very helpful. For example, let me show you some CPR gauges, right? Okay, let's take a look at this. And this is a 15-minute chart. I just want to show it as an purpose. So this was the CPR, right? And next day CPR opened, it was a little lower, but the price opened at the higher level. And post which there was a continuous CPR migration, right? And which tells you that the trend is clear in the upside, right? By looking at this, you can say that, yes, the trend is on the higher side, right? And likewise, if you look at this, for example, see this as an example. We have this narrow CPR on this day here, and look at the market. It's a trending day. Followed by that, there is another narrow CPR on the upside, and the market has continued, right? So there is a huge gap up on these two-day levels, right? So the CPR will help you to understand the market structure. And earlier we were in a downtrend, right? And this downtrend has got changed into the uptrend. If you see this level, this was a downtrend, right? And couple of moves, change the direction. So we don't have to wait for anything else. By looking at this, we can easily spot these levels and adjust our trades accordingly, right? What we have learned is, we have learned how to use a CPR, standard pivots, Camarilla pivots, each with its own logic and value. right? And in the upcoming module, we're going to introduce the VWAP, and we will show you that, and we'll show you how it becomes even more powerful when you trade along with the pivots. Okay, and I'll see you in the next module. Thank you. Jai Hind. Bye bye.